All right, hey, how's it going? Welcome to mentfx. So explanations online in regards to why losses are one of the most powerful tools that a profitable trader should be using and should be learning to use have been terrible. A lot of stuff out there doesn't actually fundamentally show you why losses actually make you money. So this video is going to simply demonstrate how losses make you money without completely boring you. Okay, so here in front of you is a chart. This is US 100, also known as NASDAQ, also known as in the future space as NQ, also known as QQQ in the stock space, etc. All it is NASDAQ. Now, before going further, I want to bring one thing to your attention. With the mentfx private screener, all you have to understand at the time is that this has been showing overall bullishness since around this point right here, since right around here. Since this point here, the mentfx screener, a tool and a software produced for all members, has been showing overall bullishness. And since then, we've been following this thing bullish. Now, that begs the question. If you used a very, very simple system where you entered longs with a large stop loss, just like this, you entered a long, you put a big stop loss in, and you looked for a 1 to 2 RR return. And you did that over and over again. So you take a trade, you take a win, you do another one. You take a trade, you take a win, you take another one. You take a trade, you take a win, you take another one. You take a trade, you take a win, you take another one, etc., 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 and you repeat. And each one of these wins in this scenario become a 2RR gainer. And all we did in this example here today, right in front of you, is we took a basic system and said, hey, if there is an underlying bullish context, or if there's an underlying bullish reason for the market to keep going bullish, all we're going to do is take very, very large based entries for lower RR. And lo and behold, in this specific example that I'm sharing with you today, this would lead to a 100% win rate, and at the end of it would lead to a +2, +4, +6, +8, and potentially +10 RR system. So in this case, in a market that really did deliver very, very well, this would have led to a +10 RR result on your actual money, no matter what that risk was. And that's still a powerful system. If you can get your mind around this alone, you can already begin to have a profitable system, even as a beginner in the trading space, which is a very big thing. But as you'll notice, this was on a very bullish market, one that delivered very beautifully over the last 460 days. That's about a year and a half. And within that year and a half, you would have returned 10 RR. If that's 1% risk per RR, that's 10% on your money. You would have returned about 10 RR on your money, basically, is what it comes down to, which is great. That's a phenomenal result. And that's actually higher than a lot of hedge funds can do. And again, there's reasons for that, but we're not going to talk about that just yet. Phenomenal. But why would a lower win rate work, right? Because this is actually a 100% win rate. Well, in one of the examples I provided my team, all I said was, now imagine you had a system where you had a way to drop down to a lower time frame. So let's say we went inside of this and looked for specific reasons to enter this. Because we know it's bullish, we know we want to follow bullish, but let's try to add on some other factors for a potential entry. Now, in the mentfx private course, some of those elements that we work through, I'm going to give you the elements right now because I don't try to hide them, but I want you to understand what they are. Some of the elements that you may use is a multi-time frame approach to timeframes, like EVC. This is simply where, for instance, if you want to enter, let's say on a 1 hour chart, you would multiply that by around 6 to get a validation chart. So you'd get around 6 hours, and you multiply that by about 10 to get about 60 hours. We'll just call it 1 day for the sake of this video. So if you just added a little piece to your system where you looked at a daily, then you went a little bit lower to look at a 6 hour, and then you went a little bit lower to enter on the hourly, you're going to have a few more barriers in place before you take a trade. And those barriers may lead to less trades, but may lead to smaller stop loss based trades, which means that you have higher upside reward. Fantastic. So that's one element. Other elements that I teach is a understanding of structure on given pairs. Another element is how is price interacting with the moving averages, specifically the 10, the 20, the 50, and the 200. Another aspect is in the structural delivery, how clear is the structural delivery, and does it reach below a prior inside structure? So these are all small elements that may change the actual entry that you'll be taking. Now let's just assume for the sake of this video, because I'm teaching you to think and understand why losses are very powerful, let's just assume all of those things lead to trades that look a little bit more like this, okay? So now all we're going to do is we're going to assume, once again, that using this tool or any other tool that you use online to screen for markets, but this is the one that I built out for my team, and it's the premium tool available. Let's just say you saw, okay, this thing is bullish, same thing, but instead of just taking random longs like this with 2RR gainers, you then take a much more multi-step based approach system using, let's say, all the stuff that I've taught either in my mentorship on this YouTube channel or that you've learned elsewhere in other YouTube channels or whatever. Let's say you use that. In this scenario here, right, let's just align a few more of these. This is a trade you might take, right, and you take a loss. Fantastic. Then maybe you wait and it lines up again somewhere around here. And you take that trade and you get to trail it for a very nice win. And let's say you get out of it around this point here. Let's say you then take another one, you get into it, you get to trail it to maybe around this point here. Then let's say you take another one up here, you get to trail it to maybe this point here. Phenomenal, right? We're just doing very, very small examples. You take another trade, maybe around here, you take a loss. You take another trade around here, you take a loss. You take another trade around, I don't even know, here. Again, I'm just doing examples, but let's assume that all of these examples led us to go into a lower time frame using, let's say, some EVC, using a few other tools. We then find the entry we want to take and we take that entry, right? So maybe you end up taking that one, maybe you take this one and you take a break even, then you take this one. Actually, probably not because it was all the way down here, so you wait. Then maybe you take this one here and you take, a small win that trails to here. Then you take another one, let's say in here, that ends up being a loss. And you can continue this, right? Maybe you take one here that ends up being a win, one here that ends up being maybe here, that ends up being a break even. I'm going to do this. I'm going to actually delete all these, okay? So again, then I'm just looking at a few examples. Then you wait, maybe you take one here that ends up being a break even, another one here that ends up being a win. I'll go a little bit quicker. A win that you trail. Actually, let's just go higher. There we go. And now you're, let's say, in this trade right here. Phenomenal. This is actually a trade that we were looking at with the team, and many people on the team actually took it. Okay. So now what's interesting, right, is we have substantially reduced our win rate, of course, right? Because now if we look through it, let's just go ahead and record it, right? You probably have a loss here, then you have a little win here, which is probably around, let's just assume 4 to 5 RR. Then this one, let's say, was a small win of 3. This was a small win of like +4 or 3. This one was, let's say, a loss, right? This one was a break even, like we said. This one was a small win, maybe of +2. This one was a break even. Let's assume we took no partial and it came down. This one was a very nice win of, let's say, +5. Another one that just delivered. Another one that just delivered. One that did not deliver and ended up break even. One that completely failed, maybe gave us a loss. One that gave us a small win, let's say. Right, we can play this game. One that gave us, let's say, a break even though it ran and we missed it. And then this one's just delivering and locked in +3. So all of a sudden, if you notice, right, we've taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades. And within those 16 trades, we're going to assume a break even as a loss, even though it's not. Let's just assume it is. Within those 16 trades, let's record that, right? 16 trades, we took 1, 2, 3, 4, 5, 6, 7, around 7 losses. Actually, that's very little. So you know what? Let's actually make it even easier. So let's just say this one was a loss as well. -1, that makes it 8 losses. Let's just take more losses, right? Let's take this one and actually just say for some reason it ended up a loss. Great. So now we're at 9 losses, okay? So now, at this point, right now, right, what have we actually done with our system? So I'm going to make this a little bit larger. I'm going to make this a little bit larger. What have we actually done with our system? Well, we actually decreased our win rate from 100% to around under 50% win rate, right? We now have a lower than 50% win rate, which means that less than 50% of our trades actually go on to make a move and actually win a trade for us. And instead, most of our trades end up coming back and taking us out for a loss where we lose capital, or taking us out for a break even, okay? So our win rate has actually been reduced. But because we have, again, refined the way in which we're entering our trades through a number of tools, like the tools taught on this channel or within my private course, which, by the way, has just been re-updated with an insanely powerful portal. You know what? Since you guys are here, if you go to the website and look at the members portal, when you log in as part of the team, I just want to show you this because it's so amazing. And there's going to be a certificate that comes with it. This is the Mastery course. Everything that I've personally learned, I'm delivering and sharing with everyone as part of the team right here, from a starting to an end point. So feel free to join and use that because there's a ton of value going into it. Nonetheless, we've reduced our win rate to less than 50%. Now, a lot of traders that are new to the space will think that this is a crazy thing to do and want this thing right here. But they don't realize that win rate doesn't actually make you money. Win rate's not the actual thing that makes you money. It's understanding how to manage your trades to a point where the work that you're doing, okay, the work you're doing right now is leading to more capital over time. And work can simply be taking losses, taking wins, and taking break evens, because that's what trading is. So in this scenario, right, with less than 50%, we took a loss, right? So 9 losses, and some of them were break evens. But in wins, we took 4, 5, 6, 7, 8, 9, 10. I'm just adding them up. 15, 20, 25, 26, 27, 28, 29, 30, 31. So in wins, we took 31 RR added, right? And then if we subtract the losses, the real losses where we had -1, -2, -3, -4, -5, -6, so about -6. That puts us at -6R in losses, right? Because we're eliminating the break evens, because the break evens actually don't end up doing anything, right? We end up at an overall gain of 31 minus 6, which puts us at, what's 30 minus 5? 25, at plus 25 RR. So all of a sudden, by reducing our win rate, aka increasing the amount of break evens or losses that we take, we've actually increased the bottom line of how much we can earn. Yeah, that's it, right? We've increased how much we can earn. So this alone should have a major psychological shift in the way that you approach and think about losses. Because the reality of losses is they're not bad. A lot of the stuff online, the stuff that you've been watching online goes, losses are bad, study your losses, learn from your losses. It's complete nonsense. Because the reality of a good trader, and the reason that a lot of people get stuck with a lot of the mentorships and the courses online and the YouTube videos online, is that they're not taught to actually take losses, they're taught to avoid them. They're taught to double down. They're taught to average down. They're taught to do the wrong stuff. And then you partner doing all that wrong stuff with a system that is based on non-trends, or a system that's not based on following a trend or a good context, or learning how to trade a market with a good context. You partner those things together and you get a 90% of loss rate in the overall space from people that are trying to make money and learn to make money in the space, because they never take the extra step to learn how the things that they think they're avoiding for a good cause are actually completely ruining their entire systems. This is how it happens. So this is not a full-on video on how to trade and make money. This is actually a reminder to all of you that have any kind of system that if you're not actively seeking out to improve the bottom line, but instead are actively seeking out how to improve your win rate, you are already screwing yourself in the long run.